Okay, we're going to look at how to find break-even point in units specifically in this video. So remember, break-even point is not something that we necessarily want. It means we make $0, but it is a good reference number to have for a hurdle to get over to find out when we, that line in the sand where we don't lose money and we start making money. So I have this contribution margin income statement that I made from the last video. So we're going to talk a little bit about how we get to a break-even point formula. And the formula itself is really simple, but I want to explain how it works. So obviously our contribution margin income statement, this is another way to state it right here. Sales minus total variable expenses minus total fixed expenses equals our operating income. Now we could also say, separate that out and say sales minus variable cost equals our contribution margin. And that means that if my contribution margin, so that's this number here, right, this 150, so sales minus variable cost equals contribution margin. If my break-even point is when this number equals 0, that would also mean that that number, to make that number 0, we need our contribution margin to be exactly the same as our total fixed cost. So when my contribution margin minus my fixed cost equals my operating income, when my contribution margin minus fixed cost equals 0, that is my break-even point. So I could also say another way, these two things are really the same. If my contribution margin minus fixed cost equals 0, that means those two numbers are the same. So contribution margin, total contribution margin, when it equals fixed cost, that equals our break-even point. Now, the formula itself is actually a lot easier. I just wanted to take through the steps to see, how the kind of the logic behind it. But effectively, break-even point is just break-even point in units are my total fixed cost divided by the price minus my variable cost, or the total fixed cost divided by my contribution margin per unit. Those two things are really exactly the same because contribution margin per unit is defined as price minus variable cost. So really they're the same thing said a different way. So let's look at a problem for this. So I've got some of those formulas I talked about here. Head First Company plans to sell 5,000 bicycle helmets at $75 each in the coming year. Unit variable cost is $45. This includes direct materials, direct labor, variable factory overhead, and variable selling expense. Total fixed cost equals $49,000. This includes the factory overhead and fixed selling and administrative expenses. So it says find the break even and the number of helmets. So I'm in units. So remember, break even point equals price minus, is fixed cost divided by price minus variable cost. These are all per unit. Price per unit, and variable cost per unit. So in this case, my variable cost per unit is given at 45, and my bicycle helmet price is 75. Price is 75, and my fixed cost, my total fixed cost is 49.5. So that means I can just plug this in now. So I've got my fixed cost equals fixed cost divided by, and I'll put parentheses, my price per unit minus variable cost per unit gives me 1,650. So 1,650 units is my break-even point. So I can rebuild this contribution margin statement like I did in the prior problem, and rather than retyping all of it, I'm going to save a little bit of time and just do this. Okay. So my sales in this case, I'm selling 1,650 this time because that's my break-even point. Multiplying that by 75 to get my total sales of 123,750. My variable cost, again, 1,650 times my variable cost per unit gives me 45. And then I can subtract the sales minus variable cost to get my contribution margin. My fixed cost is 49.5. And so my break-even point, so 1650 units is my break-even point. So that is how I find break-even point in units. Now, the next part talks about finding break-even point in sales dollars. And there's more than one way to do this. I'm going to show you how to do it in this example for now, because it's a simpler method. So the easiest method to find break-even point in sales dollars is actually do the exact same formula as break-even point in units, and then take your units times the sales price. Because all I had to do was take my fixed price or fixed cost divided by my price per unit minus variable cost per unit, and I found the break-even point in use was 1650. So to find my break-even point in sales dollars, would simply take the 1650 that I found through that process of dividing, multiply it by the price, and that is my break-even point in sales dollars. Obviously, I already have that on my income statement here, but had I not, if it just asked for break-even point in sales dollars, all I do is find the break-even point in units, multiply it by the price per unit, and that would give me the break-even point in sales dollars.